What's up, everybody? Welcome to a mid-July edition of This Week in Crypto. I'm your host, Brian, alongside Dino here. We're going to be getting into several of our usual metrics about Bitcoin, Ethereum, and some altcoins, along with a few interesting things we're seeing for assets like Litecoin, perhaps get into a big exchange move we saw for Matic, and answering a few of your questions. So make sure if you are in our chat right now, to drop a few thoughts as to what you may want us to put a particular focus on. We'll also have a straw poll going up soon, and we're going to do our best over the next hour to hour and a half to answer the questions that you have pressing on your minds and try to analyze together where we are in the markets using our data, which is, of course, objective and not intended for investment advice. Remember that Sandbase is always here to show what the data is indicating based on historical evidence, not our opinions. So that being said, we're starting off by looking at our screener here to see what price performance has looked like over the past week. And for most of you, this should not come as a shock to see mostly red here. Bitcoin down 4%, currently around 31.
Sorry, quick interjection. It seems like there's some type of feedback on your mic. I don't know if it's when you're moving or something, but it seems like some type of tapping every once in a while, just so you're aware.
Just doing a quick mute and unmute, see if that does anything, but I'll do my best to stay as non-animated as I can.
Okay.
Let's see if that resolves things. Okay. So as you may expect, guys, mostly red for the markets. Bitcoin dropped 4%, 4.5% to 31.8K. Ethereum dropped about 11% and is back at 1900. That was a big drop and likely had a lot to do with many of these altcoins, especially the ERC20s, really dropping off. So we did have a few exceptions. Obviously, Hex was a big story. It more than doubled. Is up to about 17 cents right now. We had Axie Infinity up about 82%. And then very small ones, I wouldn't say very small, but relatively small ones with, NEM going up 23%, Flow going up 36%. But, it looks like about 90% of assets took a drop, most of them double-digit percentages. So not a great week for the market. And as you likely know by now, a lot of that is going to depend on whether Bitcoin's health gets better and secondarily whether Ethereum's follows behind it. Anything you would like to add on the screener page here, Dino?
No, not really. Well, I guess except for the fact that outside of the coins that you've already mentioned, there has been a sort of a midweek pump in some of the NFT coins. So Wednesday and Thursday, we have seen a pretty interesting and sizable uptick in several NFT-related ERC20 assets. This included Axie Infinity and the SLP or Smooth Love Potion or Small Love Potion, which is sort of a part of that Axie Infinity ecosystem. We have seen spikes in the Decentraland engine, as well as, I believe, the third one was Chili's. Basically, the three coins that maybe, if you remember 2 months ago, those were the three that really started the NFT rally. So once NFTs sort of became this hot new thing, I think maybe around the week that Beeple sold his NFT for, $69 million, that was the time that these coins started pumping to kind of validate the idea that NFTs are becoming a part of the crypto mainstream. Well, they've done so again over the last couple of days. However, in the last 24 hours, we have seen a pretty strong decline across the board as far as the NFT segment is considered on Ethereum. So if people are interested in us doing some impromptu analysis on things like Decentraland, SLP, Axie Infinity, Engine, other coins that fit that description, let us know in chat and we can do it after, we just talk about the market in general.
Yeah, good point about the NFTs. There have been, there's been an increase in interest in NFTs, and I saw it right around the time that these tokens were kind of rising a little bit. It's interesting to see how the real life expectations and uptick in interest lead to these coins just shooting to the moon and then quickly plummeting back down afterwards. But obviously, when there is interest in a certain sector like that, it's still going to rely on Bitcoin not doing this. It's got to be able to stay flat or rise for a long-term gain in a certain sector. So if NFT keeps up their momentum and interest, and Bitcoin starts to look a little healthier, you can expect that a lot of those same coins that were spiking midweek to have another run in them. So they'll be extra volatile for sure.
Yeah,
one way
sorry,
or
Brian, but
another.
it seems like the mic feedback is continuing, and
Pretty
actually
bad, huh?
seems like it's getting worse. I don't know.
I'm gonna leave
Max,
the call
do you
and
hear
come
the
back.
same thing? Okay.
Yes, I
I'll be
think
right
it would
back.
be good if you reconnected your device completely, your headphones.
In the meantime, I'll just take over. Sorry about that, guys. All right, let me share my screen in the meantime. So I'm seeing some questions already lined up. Things about Hex, talk about the unlocking of 16,000 Bitcoin on Grayscale. We'll talk about, I think, both of those. I don't know how much time we're going to have to talk about Hex. There are some interesting metrics on Hex. So if more people are interested in it, let us know. But we're going to be talking about Bitcoin, Ethereum, and then we'll be taking audience questions. So if Hex is really on a lot of people's minds, sure, just let me know. All right, I'm going to talk about while Brian is away. Let's start with just general sort of overview of where Bitcoin is at the moment, because the topic of the call is what is Bitcoin going to need to resolve to the upside. For the time being, Bitcoin is still stuck in a very boring consolidation range. This is, from what I remember, the most boring period for Bitcoin since last September. So if you guys remember, there was that maybe a month and a half period between September 1st and like October 15th, where pretty much nothing was happening, and there was a very large and painful consolidation period for BTC, although some alts did pump in that period. And then we started to break out and got to where we were up until May. So from our perspective, I wanted to talk about what we're currently seeing in Bitcoin's on-chain data and things that we would like to see look better over the last 15 days of July and into August in order for us to be a bit more comfortable about Bitcoin's sort of short and midterm chances to actually get out of this gutter to the upside. So I'm going to start by, as usual, talking about active addresses. All right, we start with the basic metrics, right? Active addresses, for all of those that are unfamiliar, essentially, or very simply, what it shows is it shows the amount of unique addresses that are interacting with Bitcoin on a daily basis. This metric has had a pretty substantial decline since the May correction. We've had a sort of an average of about 1.1 to 1.2 million addresses interacting with Bitcoin for quite a long time. And then once we started to correct, there were sort of two declines in Bitcoin's on-chain activity. The first one was here, and then the second one is where we are right now. So at the moment, Bitcoin's on-chain activity in terms of daily addresses interacting with the coin is at around 800,000, just below 800,000. So that's still a far cry from about 1.3 million that was sort of a de facto amount of addresses interacting with BTC before the correction. There's what that suggests is, well, for one, a lot of people have sort of abandoned the network for the time being in terms of interacting with BTC on a short-term scale, which might be a difficult proposition for Bitcoin to battle against. So the reason why why that might be is the fact that usually sustained price rallies require or necessitate strong uptick in daily active addresses. Why? The reason why is that a lot of people believe that on-chain activity and daily active addresses in particular are sort of a proxy for token-related demand. So the more addresses that are interacting with a particular coin, the more interest it is in that coin, the more value it is being transmitted on the network more often than not, although it's not a one-to-one ratio there. And in general, the more new blood is pumping into the market. So there's some type of fundamental justification for a sustained price rally. At the moment, we're not seeing that in Bitcoin. We're not seeing that in Ethereum either. I mean, Ethereum is looking a little bit better, but for Bitcoin in particular, we are yet to see any type of like strong move to the upside as far as its daily on-chain activity is concerned. Now, I want you guys to compare this to Litecoin. So I'm not sure. Oh, one sec. My laptop is going to die. I'm not sure exactly what has prompted this, but look at Litecoin today and the last couple of days, but especially like the last 24 hours. For whatever reason, there are no news that I know of that might explain this move, but Litecoin is currently on fire as far as its on-chain activity is concerned. So let me just zoom out of some of Litecoin's data here so you can put this in perspective, how large this spike in active addresses is. Basically, the biggest one since December 2017. Actually, let me take a one-day interval. Maybe that will change things a little bit. Yeah, here, December 2017, and here is where we are now. So Litecoin at the moment, now it's an open question whether this continues, whether this is a sustainable rise in on-chain activity for Litecoin or just like a Friday fluke. However, for the time being, we are seeing slight or actually a pretty large divergence between the price of Litecoin in green, which is pretty much like everything else in the market right now, moving to the downside, and then the amount of addresses that are interacting with Litecoin that is moving in the exact opposite direction. So this is, in a vacuum at least, a fairly bullish divergence. Now, obviously, there's a few caveats here. Number one, this has only happened in the last 24 hours. So for these spikes in active addresses to be perceived as bullish, I usually like to see them prolong themselves or like last for at least a week or so. Otherwise, it might suggest that there's for example, this might also suggest that there's just a lot of people looking to sell Litecoin, and as a result, there's an uptick in active addresses, right? It's not necessarily a bullish signal if it happens just overnight. However, sustained price rallies usually benefit, obviously there's no magic bullet or silver bullet metric, sustained price rallies usually benefit from this type of ongoing stable rise in active addresses. So Litecoin, for at least at the moment, is looking very interesting. I would at the very least suggest to keep an eye on this metric moving forward in the next like 48 hours, especially over the weekend, because the weekend usually is the worst time for daily active addresses. A lot of people are just out and about doing their own thing, not really interacting with crypto. So usually on-chain activity falls by like between 5 and 15% over the weekend. So it's going to be a big test for Litecoin to see whether it's able to maintain the same type of sudden burst in activity over the weekend. If it does, I mean, that's definitely something to consider as a strong fundamental indicator or an indicator of strong fundamental activity, at least for the time being. For Bitcoin, however, we are not seeing anything close to that type of drive, that type of engagement from the general network participants. So at the moment, there seems to be a little bit of wholesale or retail inertia towards Bitcoin, and not just Bitcoin, for a lot of other coins as well. And by the way, just to put this Litecoin spike in perspective, I'm going to compare it to Ethereum, and you might be surprised here to see exactly how big this is. So let's take the last year of data. Let's log these two metrics to Litecoin, and I'm going to compare it to Ethereum's daily active addresses. And we're going to use the shared axis. And what do you know? For the first time since the start of the rally, just today, let me zoom in so you can see it. Right here. Purple is Litecoin. Yellow is Ethereum's active addresses. For the first time since the start of the rally, Litecoin's active addresses are higher than Ethereum's. The last time this happened was in 2017.
Yeah, that's a pretty big deal.
Yeah.
It's quite surprising actually to see Litecoin just absolutely roaring the way it has, and Ethereum looks a little more like a typical crypto asset does right now. There's been a sinking trend that's been happening over the last couple of months, and for whatever reason, Litecoin is really taking off. You know, the price hasn't really kicked in yet, but if this maintains itself, Litecoin could go on a little run itself, and of course it being a predecessor to Bitcoin's performance is somewhat encouraging. It could be a little something going on behind the curtains that could lead to all of crypto benefiting if Bitcoin follows suit as it has in the past.
It's an open question right now. Obviously, I wouldn't like put too much stock in this Litecoin uptick in on-chain activity, but it's at least interesting because most of the other coins in the top 10 are by no means exhibiting this amount of this type of network strength. So for whatever reason, I haven't seen any news, I haven't seen any sort of announcements or any type of marketing initiative that would justify this type of uptick in on-chain activity. So it seems to be organic. If it really is organic, if it is sustainable, the next question is, what does that do to the price of Litecoin? And then the next question after that one is, what does that do to the price of Bitcoin? And how that sort of trickles down to the rest of the market. So, but for the time being, it's just a peculiarity that I would like you guys to pay attention to. So Brian, nice to have you back. Seems like you've resolved your mic issues. Do you want to take over the screen for a minute?
Will do, yeah.
Yeah.
Restarting everything is always the tried and true method. All right. So very briefly, we'll look at exchange flow right now. Nothing significant other than, as you can see, we did have a nice little outflow happening yesterday. I'll zoom in on this really quick. We'll just look at July. So we see this big spike here. This appeared to happen right near the temporary bottom. And what this pink spike means, for those unfamiliar, is that there was a large skew toward exchange being moved, tokens being moved off of exchanges versus on. It's just simply the difference between on versus off exchange movement. And this spike says we had basically the largest one, actually a little bit larger than the one we had on July 1st. And typically that's a good sign. You can see when this spike happened, and there were a few other spikes, it led to this price rise here, which I can't hover because it'll cover it, but you can see right after the big one on July 1st, big rise. And then, we see other big ones like this, that led to a rise. So far, this spike hasn't done anything. It's a lot better when you see them in groups like this. So we did see, one really big spike and one mid spike like this, but so far just ranging. So I'll be watching closely to see if there's, another big negative exchange flow spike that comes up here in the weekend. Right now, though, not crazy significant. It's mostly just looking like, Bitcoin is continuing to tread water. Nothing crazy like this kind of spike or this spike, or especially the one that happened right after the all-time high. All right, BitMEX funding rate. So obviously we cover this one pretty frequently and for good reason. I'll take off Ethereum. Bitcoin is continuing to range between going negative and being neutral. And what this funding rate does is it simply tells you when there is a skew between longs and shorts happening on BitMEX. And when it's favoring shorts, that's when you see negative spikes like this. It means that sentiment is essentially overly negative and generally is a good sign for bulls, because when the crowd becomes negative on an asset, just like we've seen with social sentiment, that is when the people going against the crowd benefit the most and prices tend to rise. Vice versa, when you see massive spikes like this one that we saw right before the all-time high back in April, that's a sign that people are getting a little too greedy and too much FOMO is happening. So right now, we're pretty much back to neutral. We're just barely in the negative at the moment. But we're going to see if it continues this pattern right now, because this pattern continues to show that people are mostly skeptical of Bitcoin jumping back up to something like 35K or 40K and beyond. And when people are that skeptical, good sign, more so than bad. Moving on, daily active addresses for Bitcoin. We make that a little bigger.
We covered it, I think, Brian, while you were away. Yeah.
Okay, no problem. And I just want to add to it that trading volume along with it, super down. Actually, the most down it's really been all year. And that's crazy. Did you already cover that too, Dina?
No, but I wanted to add on to that. There were a few tweets that suggested the same thing, that across exchanges, there's been basically an implosion in terms of exchange volumes and trading volumes over the last 24 hours. They're kind of falling off of a cliff. There does seem to be just a lack of retail interest in Bitcoin at the moment. And I think there's a few other metrics on-chain that suggest the same thing. So obviously, we've already talked about Bitcoin's daily active addresses and kind of how low they are at the moment, or at least kind of the fact that they're plateauing. However, it's not the only metric that suggests that there's a growing inertia about BTC. So the other metric that I like to use to look at this, and I've used it as a thumbnail for this video, is looking at circulation, and in particular daily circulation of Bitcoin. So for those of you that are unfamiliar with what daily circulation really is, essentially it tracks the amount of unique Bitcoin that are moving on the blockchain on a daily basis. So it's different from an on-chain transaction volume in the fact that on-chain transaction volume tracks the total amount of Bitcoin that are moving on the blockchain on a daily basis. So for example, if I send 5 BTC to Brian and he sends that 5 BTC back to me, and then I send that 5 BTC back to him, obviously hypothetical, there would be a 15 BTC sort of movement in calculated as far as on-chain transaction volume is concerned. But as far as the unique token circulation is concerned, those 5 Bitcoin moving between addresses would only be registered as 5 Bitcoin being moved. So it helps to look at a circulation of a coin sometimes to, examine or to filter out things like wash trading and in general sort of any type of market manipulation. And what is concerning to me is this is looking at the last, 6 months. But if you even zoom out to the last year of data, you will see that the last couple of days, or actually the last couple of weeks, have been very, very low, at some points at least, in terms of Bitcoin's daily circulation. So the amount of unique BTC moving on the blockchain are in a downward spiral. They are continuing to tread downwards, and I think they've reached as low as 50,000 BTC. And that, to me, I think is like, at least according to our data, that's like a 5-year low or something. It is very, very unusual to see this amount of reduced activity, both at least in terms of the unique tokens being transacted on chain. So that's also, the amount of value being transmitted on chain as well. So both of those things kind of go hand in hand. And this, I think, Brian, is also the reason why our NVT model is looking pretty bearish today, because for those unfamiliar with NVT, what it does is it divides a coin's market cap by its daily circulation. And so if the coin's market cap is too high compared to its token circulation, or compared to the amount of value that is being transmitted on the blockchain daily, then NVT is going to show a red bar, because it suggests, look, we're currently, at least according to this one metric from this one perspective, we're currently quite overvalued. So at the moment, Brian, it seems like our NVT model is still showing is still being very bearish as far as BTC is concerned.
Yeah, the first half of July is essentially the most bearish that this model has really ever indicated. We obviously only have 1/2 of a month here generated, but going at this pace, we are getting historically low circulation compared to market cap at this time. And as this model does correctly predict more often than not, whatever the color bar is for the current month, the following month is the one that tends to be impacted the most. We have exceptions, of course, like June 2020 to August 2020, which was actually showing bearish signals, but it didn't really come to fruition until September when we had that downswing. But overall, when we have these long stretches in red, it tends to be right. It tends to show mostly declining prices during that time. This one, of course, when it happened in March, the average price of March was actually above the average price of April, even though April is technically when we had that all-time high. And then every month since, it's declined, just as this model has predicted. And look before it, the semi-bullish signal that was showing from October 2020 to February 2021, that's when it skyrocketed. So long story short, only one metric out of many, and it's not going to perfectly predict the markets. But this is one of my favorites. It certainly has shown historically to be one that's very valuable. And currently, circulation is not on Bitcoin's side. While we're here, I'll also show Ethereum really quick to show that we are in semi-bearish territory. It's doing a similar pattern where it's really starting to jump up the bar, that is, in terms of how close it is to these faint trend lines, which you may or may not be able to see on your screen. We need to see more circulation on the Ethereum side too. It's not quite in red territory like it was here when prices just declined all the way down to an average price of 130 at a low in December 2019. But once we see a pickup like this, the Ethereum NVT chart is eerily accurate, perhaps even more so than Bitcoin. So being in semi-bearish territory, not a great sign. The last time we were really in a similar long stretch of semi-bearishness was March of 2018, and prices did indeed decline just as the model would predict. All right, so that covers circulation. I won't really get into age consumed. The only thing I'll say is that we aren't really seeing any significant movements in large chunks of Bitcoin or Ethereum right now. It's mostly dormant, and we look for these kinds of spikes to show when there might be a price directional change. But right now, due to circulation being low and addresses being low, I wouldn't expect token age consumed to have any significant spikes until those two pick up. Lending to the point about the fact that dormant coins aren't being moved very much, we can also look here at the mean dollar invested age chart, which is continuing to indicate a big rise in the average age of dollars invested in both Bitcoin and Ethereum. Bitcoin's average age is actually up to 222.5, which is the highest it's been since early February. It continues to rise up, and if it goes at this pace, it'll actually get to 1 year or at least 2021 highs in perhaps even the next month or so. So we'll see if it continues this trajectory, but very important to watch this one as a good macro indicator, because if it starts to flatten out, just like we saw back here in early April all the way to mid-May, that's a sign that it could be a potential turning point. You usually don't see, what's good about this metric is it gives you warning time usually. It doesn't usually just go up, 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 and then all of a sudden, boom, it falls down. It'll have a gradual flattening out period that will generally impact the markets and so show some interesting things to cause a little bit of FUD and FOMO, and then it becomes a self-fulfilling prophecy that eventually drops it back down again. So we'll very likely see at least some sort of flattening out to warn of the next bull run before it just suddenly happens out of the blue.
Would be a good idea to just show the last 5 years of data so that people can see exactly what happened previously when these types of upticks happened, especially for Bitcoin. You know, we talk about this quite often, but it's one of the macro indicators that we follow on a daily basis, even though, you know, it's not going to tell you a whole lot about the day-to-day activity of Bitcoin and its price action. But previously, these large drops in Bitcoin's mean dollar invested age have coincided with bull cycles in 2017 and 2019 and 2021. And then the end of that slope, or the bottom of that slope, and the move to the upside has coincided with both the price top in 2018 as well as 2019 and the beginning of a bear cycle for Bitcoin. So obviously historical performance is not indicative of future results. However, it's at least something to consider. Is that previously what this indicated is that on average we have seen an end of redistribution of Bitcoin. A lot of coins, or on average units of Bitcoin, have moved towards dormancy and are no longer being transmitted freely on the blockchain at these points in time. And that's been what's been going on over the last 2 months. And all of Bitcoin metrics seem to suggest that the daily active addresses, circulation, all they're down across the board. So it's very much unsurprising to see mean dollar invested age continue to rise, because what it suggests essentially is that the average age of Bitcoin are continuing to rise. Bitcoin are becoming older, meaning they're not moving on the blockchain as much. That is going to be tricky to for Bitcoin to counter, simply because it's at the end of the day suggests there's less value being transacted on the network, and from a fundamental perspective, it's then very difficult to provide high valuation for BTC in the short term.
Yeah, good point. Yeah, the even when mean age is rising like this, it can still lead to a price rise, as we saw back here in 2019, of course. And as Dino mentioned, past performance doesn't always lead to future expectations. We have plenty of instances where this model shows that it's mostly just a macro indicator versus something that in real time is going to shift the markets. But like I said, look for those flattening out periods. They really do make a difference and can give you a nice warning sign before a huge shift comes. All right, let's jump into whales here. So this is one of our most popular metrics, at least in terms of social media. People really seem to have interest when it comes to our millionaire tier and what those addresses holding between 100 to 10,000 Bitcoin are doing at any given time, whether that be accumulating or dumping on the markets. Right now, they're still showing that they are in an accumulation pattern. We have gotten to a low here of about 9.02 million held by this group in mid to late May. But it jumped up all the way to about 9.13 about 10 days ago and is now at 9.11. So that's still about a 90,000 Bitcoin accumulation since May 21st, give or take 2 months or so, call it 7 to 8 weeks. And that's a good sign, because this group of whales does play a role in what direction prices move next. And they seem to be confident that this is not the beginning of a huge bear market that takes us down to sub 20K like a lot of people are proposing. They're simply scooping up more and more. And at some point, these whales are going to impact the market to the upside, unless, of course, this is kind of just a temporary accumulation and then they even decide to dump. But as of now, this indicates that there's a better than average likelihood that prices can recover, because whales are going to be able to control at some point, whether prices are going to recover. And if they start to buy in swarms, while they already have this much of the supply in their hands, they have a tremendous power to push markets in the direction they want it to go to. In the same sense, we can look at it from a different perspective. This is actually, it's not showing correctly. Give me one moment. I'm going to get the balances up. BTC. Combined holder distribution. There it is. Okay, so this is showing the amount of addresses for each respective tier. The important one to look at would be the gold line here. And this is actually 1,000 or more Bitcoin. And it shows a much different perspective. It shows that things are actually moving down. We had a high, it's kind of hidden behind the bubble here, but we had a high of about 2489 total addresses back on February 6th that held at least 1,000 Bitcoin. That has since dropped all the way to 2147. So call that like a 1/8 or so drop in these addresses. That makes it harder for whales to have an impact in the same respect, even though they're holding more coins cumulatively, especially in the last 2 months. There are less total addresses that fall under this tier. And that can be kind of a contrasting sign. We would want to see this kind of metric heat up a little bit in order to feel confident that whales are going to make a move at some point. So balances are up, but total addresses are down. Anything you want to add on your end to this, Dino?
No, I think you covered it pretty succinctly. The thing that I usually use, or the two groups of addresses that I usually use in my weekly reports are 1,000 100 to 1,000 and 1,000 to 10,000. And the reason why, so some people have asked us, and I guess that's the thing that I wanted to maybe expand upon a bit. Some people have asked us, why do you use these two groups of addresses? Why not use all addresses that are owning more than 100 Bitcoin, right? And it's the same reason why we don't look at the highest groups of addresses for any altcoin as well. The reason being is that the higher up you go, the more likely it is that your data is going to be full or dominated by exchange wallets and in general, sometimes infrastructure and team wallets. But for Bitcoin in particular, those largest echelon of holders of 10,000 Bitcoin and more, are mostly going to be dominated by exchange wallets. And then if you're looking at the behavior of those addresses and you're trying to gauge the average sentiment of that group of holders, if you're assuming that those addresses belong to whales, it's a very different result, or it's their behavior is going to be to have a very different impact, whether they are whales or whether they are exchange wallets. And that's why we usually like to isolate or exclude the last group of holders. First of all, because there's only about 40 addresses holding more than 10,000 Bitcoin. And second of all, because we think that most of those addresses are not a great reflection of the average whale sentiment, but rather they are populated by exchange wallets. And therefore, if you see a spike in exchange wallets, it's not the same as you see a spike in whale wallets, right? A spike in exchange wallets would suggest that there's more Bitcoin being moved to exchanges, which is a very different behavior than if you're seeing a lot of Bitcoin being moved to private whale addresses, individual whale addresses. And that's why, to eliminate the noise as much as possible and to try and gauge the actual sentiment of whales rather than all holders, which is just going to be a mishmash of whales, infrastructure wallets, exchange addresses, DeFi projects, we are trying to look at these sort of mid-level holders. I mean, these are all still millionaire addresses, but in our opinion or in our experience, they have specifically because of the historical behavior of these addresses and their sort of correlation with the price of Bitcoin, they seem to be the most reliable gauge of average whale sentiment towards BTC. So that's the only thing that I wanted to mention. So I think, Brian, would be also a good time for me to maybe share my screen and show people how they can ask questions on our Raise platform before we move maybe a few minutes into Ethereum as well.
Please do.
All right, cool. So let me just share my screen real quick. All right, guys. So as you may know, there are two ways that you can ask us questions. Obviously, you can ask us in chat, but what we are trying to do is we are trying to have a more decentralized way to get feedback from you guys, not just in terms of questions that you would like us to answer on stream, but also just in terms of what you think of the stream. And also you can ask us questions for future streams. So anything that you ask us right now, if we haven't prepared it already, we can only do some type of impromptu analysis. You know, we can't do any sort of prior research, maybe ask our developers and data scientists to create new charts or new dashboards to let us contextualize any of your questions more carefully, right? So this platform right here, and Max is going to share a link to it in chat. It's a platform which we've built, or it's a landing page that we built where you can ask questions by submitting sand tokens or burning sand tokens on a Rinkeby test network. So this is all on a test net. Don't need to worry about anything. All you need to do is you go to this website, you connect your MetaMask, you switch your MetaMask to a Rinkeby test network, as you'll see right here. There we go. You will be able to claim a few YSAN tokens, and then here just enter your name, or you don't have to, just enter whatever you want your nickname to be, your message, and then the amount of YSAN tokens you want to burn. Once you submit it, we get a list of questions submitted by the audience, and then we can answer some of them during this stream. But more importantly, we can take the rest of those questions and, number one, either create text insights throughout the week where we answer your questions in text form on our website, or we can, save a few of those and answer them on next week's stream, especially if we find something to be super interesting. So if you wanna, try out this platform, it would be great. We're trying to test it and see if everything works because it's all on the Ethereum testnet as well. Try it out over the next 5 to 10 minutes. Let's see if we get any questions that way. If not, we can always just revert to everybody shouting in chat what type of coins they would like us to analyze, and then we just take the most popular ones. But it would be great to see if we can actually get this rolling. So until we do that, Brian, anything else that you want to do, that you want to cover on Bitcoin? Because there's a few sort of peculiarities for Ethereum I think we also want to touch upon.
Yeah, let's transition over to Ethereum, and I'll chime in along with you as you share.
All right, sounds good. So let me, so you should be able to see my full screen here. All right, I was just checking Mana during the call to see if there's anything there that we might want to cover. Oh, one thing that I wanted to cover both for Bitcoin and Ethereum, so I think that's a good sort of segue, is looking at its MVRV ratio. So for those of you that are unfamiliar, this is a metric that we often use, or actually use quite often in daily and sort of macro analysis. MVRV ratio is an on-chain indicator that tries to visualize the average profit or the average loss of a certain group of holders, right? So what separates Santiment from a lot of other data providers is that we provide time-bound MVRV ratios. So for example, currently, we're looking at the 365-day MVRV ratio. In very simple terms, what that means is we're looking at the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 365 days. At the moment, that number is minus 14%. Basically, the average loss of addresses that have acquired Bitcoin in the previous year is currently minus 14%. And you can not only use that for a 365-day ratio, if you go all the way down here to on-chain and network value, you will find a bunch of different time-bound MVRV ratios, all the way from 1 day to 10 years. So the way that people use this metric, on-chain analysts use this metric, is the higher the MVRV ratio gets, the more likely it is that people are going to start claiming profits, because the higher the profit, the higher the MVRV ratio gets, the higher the profit margins are for this group of holders. And as a result, the more likely it is that they're going to start claiming those profits, and there's going to be some additional sell side pressure, and that's going to be, probably impacting the price action of that particular coin in a negative way. So for example, we've seen these sort of massive spikes in Bitcoin's MVRV ratio all the way up to almost 120% at a point, suggesting that long-term holders were doubling on their initial investment. And as a result, there was an increased risk that we are going to see some profit taking in the short term. And as a result, every time that we've kind of breached this 100% level, there has been a coinciding decline in Bitcoin's price action. So the way that people use this metric is they look at historical patterns. They look at previously established danger zones, or like the tops of Bitcoin's MVRV, and the bottom zones, or the lows of Bitcoin's MVRV. Because the lower the MVRV ratio is, the more undervalued a coin is according to this metric alone, right? So if we look at Bitcoin's 365-day MVRV, we can see that currently it is at basically its lowest level it's been since the start of the rally. So it's at about minus 15%. Here we were all the way down to minus 16, I think. So it's almost there at about the lowest level since the start of the rally. There's if Bitcoin drops by another couple of hundreds, it's gonna get there. So looking at historical trends, the bounce back zone, there are a couple of bounce back zones for according to Bitcoin's 365-day MVRV ratio. So we've already seen this type of sort of zone for Bitcoin lead to several price bounce backs in the past at about minus 15, minus 20%. However, if we drop below this level, the next really historical level that we can sort of look for as a a potential bounce back zone, at least according to Bitcoin's historical data, is all the way down to like minus 35, minus 40%. So it's going to be very interesting to see where we end up as far as Bitcoin's MVRV ratio is concerned. Now, obviously, the lower it is, the more opportune time it can be to accumulate. But you still need to refer to historical data to see how low we can go. And the lower we go, historically speaking, the more unsustainably the more unsustainable that MVRV ratio is, and it's going to lead to a sort of a short-term normalization of the price, like we've seen here during the coronavirus crash. So this was a very unsustainable level of Bitcoin's MVRV ratio. We went all the way down to minus 40%. The only other time that we've gone there in the last 5 years was at the bottom of Bitcoin's bear cycle in 2018. So it was fairly clear that these levels of MVRV ratio are quite unorthodox and might lead to a short-term price recovery. Both times they did, not just short-term, but actually mid-term as well. So yeah, go ahead.
One thing, we have a question in race, but also I lost both of you guys' cameras. Could you re-enable in Skype?
All right.
Sure.
Interesting. So how do I re-enable it? My thing seems to be already...
Just switch it off and switch it on again and just try that.
Yeah, just click the camera off and on.
All right.
Mine should be back up, Max.
How about now? Can you see me?
No, unfortunately not, but then we're just going to continue without it.
All right, wait, let me... Okay, I turned my camera on and off physically. My camera hardware. Does that do anything?
1 second. I don't think so.
It's okay. We can go without the cameras. Not the end of the world.
Interesting. All right. Cool. You can still see my screen though, right? So
yes,
let's just move to Ethereum. Right. Let's just move to Ethereum to show where we are as far as Ethereum's 365-day MVRV is concerned. And Ethereum's is right around the break-even point, almost there. Not there just yet. We're at plus 4%. So Ethereum's long-term holders, or all addresses that have acquired ETH in the previous 365 days, are almost at a break-even point. They're nearly there. The last time they were there was here right before this bounce back. So it seems like the 0% is at least for the moment an established bounce back zone for this cycle. However, historically speaking, there's quite a ways to go down before we can really say, okay, we are at unsustainably low levels of Ethereum's 365-day MVRV ratio. The good news is, however, that both MVRVs for Bitcoin and Ethereum, they look much more healthy than they looked here, right? So this is obviously, like when you look at the last time these MVRV ratios were this high, you can definitely see that it was a pretty concerning level of profit just sitting on the sidelines being unclaimed. So currently there's no longer that type of situation on the market, and the lower this gets, the more painful it's going to be, but the more healthy Bitcoin's and Ethereum's recovery is going to look like in the short term. So that's one thing that I wanted to mention. The second thing that I wanted to mention, there's been a big deposit. So for those of you that are unfamiliar with our platform, you might not know that we also have additional sort of features outside of just charts. One thing that we've implemented a few months ago is this list of key stakeholder signals, where essentially what we do is we track a bunch of different metrics of ours, and we look for anomalies in those metrics in specific coins. So today we got this big, when we look at large exchange deposits, we've got these few anomalies, one of them being for Ethereum in particular, right before this crash, saying there's been a large deposit of Ethereum to Binance of about $250 million on July 16th around 7 a.m. I guess this is UTC, right before this crash. You can see here, but by clicking on the transaction hash, you can see exactly where that transfer came from. So we see it came from just a address that's not labeled either by us or Etherscan as belonging to an exchange. So we assume that it's an individual address, and it went to Binance. So that's 200. So that's $250 million in Ethereum moving to Binance about 12 hours ago. it's a single transaction, but it's sort of indicative of of a lot of what we've been seeing recently. Is that some amount of large whale transactions moving to known exchange wallets continues to occur, suggesting that there's not a whole lot of like uniform confidence around either Bitcoin and Ethereum when it comes to whales. Some are accumulating, but at the same time, we see some of them just looking to cash out. And it's gonna be interesting to see how this one resolves itself. It's not every day that you see $250 million being moved to Binance, and this is the price of Ethereum since. But yeah, this is something that we also like to look out for as well. We can see a similar thing for Matic. Massive spike in exchange deposits, so $10 million worth of Matic moving to exchanges right before this crash here. Another very sort of indicative move of some Matic whales looking to probably take advantage of the coin before it drops further down. So it's something that I would definitely urge you guys to check out as well. You don't even need a Sandbase Pro subscription, I believe, for this. It's on our homepage. Every day we get new signals, not just for large exchange deposits, but for a bunch of different metrics. Whatever is sort of popular or interesting on that day, it will trigger here, and you can take a look and find maybe some opportunities either to buy or to sell, depending on the move. All right, Max, do we have any questions on Raise before we continue? Anything that people would like us to discuss?
Yes, 1 second. Let me also display it on screen, if that works.
All right.
Thank you, Plant Power, for your question. We have one question about whale metrics again. Don't you think whales are no longer holding all Bitcoin in one wallet, as they know they're being watched? And I think we had the same question for exchanges. Like, how do we know that it's all in one wallet and it's not split up over 10 and then it's one category down?
Yeah, I mean, for sure. That's also the reason why I look at, for example, okay, let's look at Bitcoin. By the way, Plant says sand raise questions only allow 100 characters, which is far too small. Agreed. Good feedback. I'll let our developers know. Thanks, Plant. All right, let's go back to balance of addresses. Take the last 6 months, maybe. Okay. So, all right, these are the two groups that I like to keep an eye on. So 100 to 1,000 and 1,000 to 10,000 Bitcoin. So the reason why I merge them very often, Plant, is the fact that you can already see that there's sort of a mirror movement of these two groups of addresses combined, which if you look at Ethereum, there's a very similar pattern in large addresses that just seem to kind of be going into the opposite direction, which I think is sort of telling, or at least to me, right? Obviously, this is on-chain data, and there's only so many clear-cut, objective assumptions you can make, but I think, to me at least, what this suggests is that, in fact, there is a redistribution of these whale wallets away from this massive group, these addresses holding between 1,000 to 10,000, into smaller chunks of addresses that are holding between 100 to 1,000 BTC. So I've seen a lot of people at this point in time, right around January and February, talk about, these massive wallets are starting to decline in value. They're starting to offload some of their balances. But if you look at what happened in the one category lower, it was the exact opposite move. So what it suggests is basically just a reshuffling among large, institutional wallets, just whale wallets overall, rather than an increase in sell side pressure, rather than whales looking to dump a bunch of Bitcoin on the market. So this is also the reason why I look at these two groups combined, so you can merge them here to look at changes in these trends, right, between them. Rather than just looking at them separately, which I think is more telling, because looking at them combined shows you that yes, even though there is some reshuffling, there's also a clear uptrend up to a point and then a clear downtrend from that point. So for example, since the start of the rally, we can see that these two groups combined have accumulated a bunch of BTC. This is from 47% of Bitcoin's total supply to 49%. So 2% of Bitcoin's total supply. I believe that's about, we can see exact numbers. Let's move to absolute and then merge them together again. So we've gone from 8.69 million to 9.16 million Bitcoin in about 4 months. So that's a pretty massive uptick in the, that's 300 to 400,000 BTC. Yeah, 400,000 BTC added to these addresses combined. So even though one group has gone up, the other group has gone down, combined, there is an accumulation trend. And then since the all-time high combined, even though to get individually they would look to do the exact opposite thing, combined they do seem to they did seem to have a period of redistribution away from these wallets and likely to exchanges. And so since then, once again, merging those two groups together, it seems like we are, even though it's a bit shaky, we are in an uptrend once again. So I do think, even though, yes, you are correct that they are being watched, one thing that I like to do because of that is I like to look at, okay, which groups of addresses, when you compare them to each other, seem to have similar but opposite behavior. And then I would merge those groups together to keep a closer eye or to kind of get more context about those moves. I hope that helps. You can see essentially the same thing when you look at Ethereum. Let me show you. Okay. Look at these two. Look at these two. Right? Do you not see that they're basically just mirrors of each other? So, a movement, obviously for Ethereum, it's, I think, at least in my experience, much more difficult to figure out exactly what these moves entail. Some of these are going to be like, for example, this might very well entail, or actually this period right here, might very well suggest that there's been a redistribution of Ethereum away from just large addresses, whales, to the ETH 2.0 deposit contract, right? Because the deposit contract went live, I believe, right here. So the fact that we've seen a big dip here and the start of a rise in this group of holders right here would suggest that, yeah, there's a lot of whales looking to move their Ethereum to stake in the ETH 2.0 network. So and then many of these, because of DeFi and the other use cases, are going to be a bit more difficult to interpret. But for BTC, at least for the time being, I think it's more easily interpretable as far as what the whales are doing and what addresses belong to whales and which don't. I hope that makes sense. Max, any other questions?
Yes, let me cue the second one. Thank you, Kwee. I think that's how you say it for this question. Thoughts about potential legal issues with USDT and BTC market moves, metrics to evaluate this. So maybe we can take a look at USDT and talk about it a little bit.
Sure, yeah. So, potential legal issues, I don't know. I think Bitfinex has, done a pretty good job at defending itself in front of the NYC AG. So, unless I see any additional news, I wouldn't be too concerned about specific legal issues for Bitfinex, Tether, and BTC. As far as the metrics that at least I like to look at for when it comes to Tether on-chain, I like to look at several specific metrics. So first thing that I'm going to do is I'm going to log the price of Bitcoin. And then I'm going to go to Tether. And this is ERC20 Tether, by the way. And there's a few other, there's a few specific metrics that I like to look for. So number one is you want to look at the circulation, or actually total circulation of USDT. Now, because the price of USDT is not very volatile, this pretty much equates to the market cap of USDT. So if you look at market cap, One sec. Yeah, if you look at market cap, it's pretty much the same. So essentially what circulation shows is it shows the total amount of USDT in existence. And because there's no, the USDT is pegged to $1, there's not a whole lot of difference between market cap and circulation. However, I still like to look at circulation because there's still some price volatility, even for stable coins. So this is a bit clearer. And there are some people that suggest that the large minting events for Tether would often sort of be precursors to price recoveries for Bitcoin and the market in general. And as such, Tether is sort of manipulating the market, so on and so forth. So assuming that is correct, first of all, let's assume that's correct. I don't have any proof of it whatsoever. But assuming that is correct, last month and a half, we have seen zero uptick in the amount of Tether being minted. So you could make the case that if we make the assumption that big moves in Tether's minting are indicative of a attempt to push the market to the upside, it doesn't seem to happen so far. And actually, the last push came around here. There's been a short-term recovery, but it was very much within the established range for BTC's trading. So for the time being, there doesn't seem to be a whole lot of either retail or institutional interest into minting more coins. And for people that believe that this is sort of indicative of demand into the market in general, for people to exchange stable coins for more volatile cryptocurrencies, it's not looking great. However, if you look at the Tether's sort of supply over time, I mean, it's not, we've tried to do some backtest on this because it's a very common idea, right? So I've asked the data scientists to try and kind of create a strategy where you would trade Bitcoin based on large minting events for Tether. It wasn't a very good strategy, or didn't perform all that well. But there was maybe 9 months ago, so something might have changed. We might want to retry that strategy once again, but it wasn't as successful as people would want you or have you believe. So as far as on-chain wise, this is one metric that I like to look for because a lot of people do believe, sometimes it becomes a self-fulfilling prophecy. A lot of people do believe that these large moves in Tether might suggest that increased buy-side pressure. And then the next metric that I like to look for is exchange inflow. Now, this not a lot of people talk about. I mean, I talk about it all the time, but not a lot of people talk about it on the web. I've seen a few analysts start discussing it a bit more closely recently. To me, this is something that I pay attention to because it seems to have worked in the past. Until it stops working, I'm going to be paying attention to it. And this is the relationship between Tether's exchange inflow and the price of Bitcoin. So the idea here, what I believe and what some other people believe could be happening, is that when you see these spikes in exchange inflow of Tether or of USDT in particular, basically large amount of USDT being moved to known exchange wallets, it might suggest an increased desire to exchange those Tethers, units of Tether, for more volatile cryptocurrencies. In other words, spikes in exchange inflow for Tether might suggest buy-side pressure for Bitcoin, Ethereum, generally, the market in general, but specifically Bitcoin, because, a lot of USDT pairs are, the most popular USDT pairs are with BTC. So when you look at this chart previously over the last 6 months, you can definitely see that there have been some curious upticks in Tether's exchange inflow when you compare it to the price of Bitcoin. So we've had it here, right around this local bottom. We've had it here on this local bottom, here on this local bottom, here before the short-term recovery, and then here at the beginning of or first of all, you can see that we've had a massive spike right before we recovered shortly, and then another massive spike right before we recovered shortly. Around both local bottoms for BTC, there have been another massive spike in Tether. And then more recently, on June 22nd, right around this local bottom at about 30.9K, there was another uptick in Tether's exchange inflow. So this is a metric that I like to look at from just a purely on-chain perspective. it works until it doesn't for me, right? There is maybe a little slight uptick over the last couple of days, but it's kind of curious to see where this resolves. It's not as prominent as these other ones. And by the way, I'll tell you one other thing: USDT is not the only stable coin that has this type of relationship with Bitcoin when it comes to the dynamic between its exchange inflow and Bitcoin's price. If you look at the second biggest stable coin on Ethereum, and that's USDC. I know a couple of you might have thought that it's dying. If you look at the exchange inflow of USDC, we've got it here at this bottom, we've got it here before this, we've got it here, and we've obviously had it both here and here. Now we have it yesterday as well. However, and this is another thing that I need to mention, is when you're looking at the exchange inflow of a coin, you don't only want to look at the amount of coins moving into the exchanges. You always want to also confirm that there's not a correlating or even a higher amount of that coin moving away from exchanges, right? And that's why you might want to use exchange flow balance. It's another metric that shows you the amount of coins moving in and amount of coins moving out of exchanges on a daily basis. So when we look at USDC's exchange flow balance, we see that there have been upticks here, here, here. Most of these large spikes in exchange inflow have had a cluster of exchange inflow spikes. However, yesterday, let's zoom in. The exchange inflow. Yesterday, at this massive spike, there's actually been both an uptick and then a coinciding down spike or downtrend in the exchange flow balance, suggesting that yes, a bunch of USDC has moved into exchanges, but almost immediately afterward, a sort of almost the same amount of USDC has moved away from exchanges. So that's very different to just a spike in exchange inflow, because what this suggests, this right here, what it suggests is arbitrage rather than buy-side pressure. It suggests that somebody was moving USDC to and from exchanges, one exchange to another, probably trying to take advantage of some newly found arbitrage opportunities, rather than just moving millions of USDC in order to buy BTC. So that's always something that you need to consider. There are more than one reasons why you would see stablecoins moving to exchanges. Number one, sure, it is to potentially exchange them for more stable, more volatile cryptocurrencies like Bitcoin. Number two, however, is arbitrage. Number three is staking. Like I know that Coinbase has some staking incentives for USDC. So there's more than one reason why you would see massive amounts of stablecoins moving to exchanges. And you should always kind of try to figure out what is the most likely scenario that you're seeing. So hope that helps. All right. Fat says, I think this is very helpful, but I just read something about possible LTC price increase through the end of the year. Someone will be buying equal amount that's being mined. I think Grayscale, not sure. Oh, okay. Could be cool, Fat, if you could share a link to that. Would be interested in hearing what the source is, because yeah, that spike in Litecoin's daily active addresses. Somebody in chat mentioned, I think it was SJ, mentioned that it might not be that the other providers are not showing the same spike. So I'm checking with our developers to see if it is legitimate, this spike in the Litecoin's daily active addresses. But it could be prompted by that news that some people are bullish on LTC. Yeah, this spike right here.
I just want to note that YouTube is removing all links that are put into chat. So
okay.
No use in trying.
Okay. Do we have any other questions? Max?
Yes, we do. Let me cue the last one.
Okay.
It's by Mr. N. What do metrics show for OXT? That should be ORCID. It has been ranging for nearly 2 years.
Okay.
OXT.
Okay. By the way, just got a confirmation from our devs. I was investigating, it got recalculated. It is around 400,000 something now. So it seems like the Litecoin daily active addresses spike was a short-term bug, and it is now gone. So good looking out. That's why I always say not to be, always look for a sustained uptick in Litecoin's on-chain activity or any coin's on-chain activity. So if we look at Litecoin now, still stands there, but it seems like our devs are telling me that the actual value is around the 400K now rather than, yeah, there we go. About 300, 400K now rather than 500, which showed a minute ago. It's still on an uptick, but not as dramatic as it was. So OXT. Orchid. All right, I hope Orchid is an ERC20 because, yes, it is. We usually have, we have a much more comprehensive data coverage for ERC20 coins than for other coins. So, okay, let's look at OXT. Was there any specific request, Max, as far as what they're interested in OXT, or just a general overview?
In the question, it was mentioned that it was ranging for 2 years now. So maybe we can relate to that somehow.
Okay. I mean, this doesn't seem like a range. Yeah, it's been ranging for a while before the rally, I guess you could say, for sure. All right, well, let's... Oh, wait, this is the price of Bitcoin. I'm sorry. There we go. All right. I mean, it seems to have its ebbs and flows. All right, let's check it out. So OXT, right? Similar to a lot of ERC20 coins, this is something that we've seen across the board, this type of decline in on-chain activity in the last 3 months. So we've gone from about an average of 500 addresses all the way to 500 to 150 addresses interacting with OXT on a daily basis, which is a pretty substantial decline. And it's not something that is going to be conducive to a sustained price rally. Like, for example, let's zoom in. We see this sort of slight uptick. We go from 119 addresses to immediately as OXT spikes, we see a short-term spike in active addresses, but it is obviously or clearly driven by this price rise, and immediately afterwards it just moves back down to its normal levels of activity. So as long as you see this sort of relatively low and disinterested network activity, it's not necessarily a great sign for OXT in the short term. And also, what I like to look at is also looking at OXT's deposits. So deposits are addresses that are used to funnel OXT or any coin to known exchange wallets. So when there's a spike in OXT's deposits, there's essentially a spike in the amount of addresses moving OXT to exchanges and presumably to sell those OXT. So some analysts use deposits as a proxy for sell-side pressure. The more deposit addresses are active, the more people might be looking to sell OXT. So for example, you can see here yesterday, last week, you can see that there was a spike in active addresses, right? But there was a coinciding spike in active deposits, a massive spike, actually, suggesting that most of this uptick in on-chain activity, in address activity, wasn't because people were just finding out about this coin and all of a sudden there's increased utility on the network. No, it was a bunch of addresses moving their coins to exchanges, and as a result, we can see that this type of price action has not lasted for a long time, and immediately it went into a short-term correction. And this is not the first or probably the last time that we see spikes in OXT's deposit around local tops. We've seen it here and here as well. So it's something to be mindful of. When you see spikes in address activity, you should always also look at the active deposits as well, because it might suggest that on average, the spike in active addresses is actually just mostly prompted by people looking to sell rather than rather than new blood moving into the market, right, or into that coin. So for the time being, OXT's on-chain activity is continuing to trend downwards. Now, this is obviously not just endemic to OXT. I showed Bitcoin, I showed Ethereum. Most large cap coins are having the same struggles. So it's probably going to remain this way until we see some massive network-wide uptick in price action. So for the time being, there's nothing to really, at least from a purely network activity standpoint, it's not looking super bullish, right? But that's what you would expect. So let's look at the supply of Orchid on exchanges. I'm curious whether it's rising or declining. Let's look at the last year of data. Okay. So, we've had a period of obviously a pretty substantial increase in the amount of OXT on exchanges, going to about 30% of all OXT on exchanges. That's quite a bit. It's actually, quite a lot for a small coin. Seems like it's quite concentrated on exchanges. What I would ideally like to see is this type of a decline, suggesting that there's a diminishing sell side pressure. There might be a supply crunch. And, it seems like even this time around, this decline in the supply on exchanges has coincided with the rally. Obviously, this was also prompted by just general market activity. But since then, as the price started to rally, so did the amount of OXT on exchanges, suggesting that more and more people were looking to sell. And it was, it coincided with the local price top for OXT. So from a midterm perspective, ideally, what you want to look for is the decline, sort of a consistent decline in the supply of a coin on exchanges, because it suggests that there's a reduction in sell side pressure. There's a reduction in the amount of people looking to exchange their OXT bags for stable coins or whatever, right? So since the correction, the supply on exchanges has kind of just been flat as well. There doesn't seem to be a whole lot of new sell side pressure, so I guess that's good at least. But at the same time, there's not a whole lot of just like withdrawals of OXT from exchanges. It seems like people are just waiting to see what happens with the big coins before they move before they make any major moves. Let's look at net profit loss as well. See if there's anything interesting here. Okay, actually quite passive as well. So for those of you that are unfamiliar with this metric, it's something that we've developed over the last maybe 5-6 months. Net profit loss is a metric that tries to analyze the average profit or the average loss of the entire network's worth of daily transactions. So the way that it works is for each unit of OXT that moves on the blockchain, let's assume that there was a unit of OXT that moved here, right, last time. We take the price at which it was last moved, and we assume that this was its acquisition price. And then the next time it moves on the blockchain, let's assume that it moved here at the top. We take the price at which it was moved here, and we assume this was its sell price. So the difference between these two prices becomes, for all daily transactions, becomes this metric. And as a result, spikes in net profit loss like these suggest there's an increase in profit taking. There's that on average, coins that are moving at these points in time are moving at a relative profit compared to the last time that they moved on the blockchain. In other words, OXT holders were moving their bags at profit, probably looking to sell, take advantage of the rally. And as a result, very often you will see these types of upticks in net profit loss sort of indicate that there's a little bit too much of a too much of a sell side pressure, and it could coincide with a short-term correction, sometimes a long-term correction as well. Since then, however, we have seen these sort of capitulation dips. So these large dips in net profit loss, suggesting that at these points in time, on average, all OXT coins that were moving on the blockchain were moving at, well, sometimes significant loss relative to the last time they moved on the blockchain. So it seems like we've gone through a period from a whole lot of profit taking and people just taking advantage of this rally to a period of disenchantment with the network, and a lot of people just offloading their bags. Since then, yeah, most of these drops, most of network profit loss is on the lower end. If we zoom in here, and we can zoom out of this massive drop to show you. Yeah, I mean, actually, when we zoom in, the only profit taking spike was right here. Before we started to correct, suggesting that, yeah, immediately, as soon as the price spiked, there were, on average, coins moving on the blockchain were moving at significant profit. So somebody was trying to take advantage of the rally. I think we see pretty much an immediate spike in active deposits as well. So, I mean, these two signs combined usually suggest that, okay, there's a lot of sell side pressure. You might want to consider reducing your position in that particular coin. So, but outside of that, most of the moves in net profit loss since the correction over the last month and a half have been down. So, people are in pain. and that's not necessarily a bad thing, to be honest. A lot of these drops in net profit loss for Bitcoin, for example, have coincided with local bottoms, because what it suggests is that weak hands are capitulating. You know, people are selling their bags at a loss, and if there's enough buy side pressure for that coin on the other side of the aisle, then these types of drops in net profit loss, like here right around the bottom, can lead to short-term price recovery. It can be rejected onto the upside. Like, for example, let me show you Bitcoin's net profit loss, and you'll know what I mean. So this is Bitcoin. All right, let me zoom in. So this is Bitcoin's net profit loss here, here, here as well. This cluster of spikes. Several of these large drops in Bitcoin's net profit loss have all coincided with local bottoms, or periods where on average people were looking to offload their bags because they were fearing further corrections, and in fact the exact opposite happened. So I mean, in general, we have also for Bitcoin gone from a period of elevated profit taking all the way to a complete opposite pattern where most people are no longer taking profits but rather selling at a loss, suggesting that people are very bearish, people are very scared. So it's no surprise that you would see the same thing on OXT right here. All right, let's check out OXT's MVRV to see where we are at the moment. Let me delete this chart, take MVRV 30 days. All right, so this is the 30-day MVRV ratio for OXT. Essentially shows the average profit or the average loss of all addresses that have acquired OXT in the previous 30 days. At the moment, it's at about -8%. Which is better than it being a positive. I can tell you that much. Like I said maybe 15 minutes ago, the lower this metric is, the more opportune time it can be to accumulate, according to what some investors believe. We can see that sort of an established bounce back zone for OXT, according to its short-term MVRV or 30-day MVRV, is here at about -40%. So there's quite a long ways to go before we can say that we are clearly in a historically established bounce back zone. Like, we can see that both here on May 22nd and on June 21st, like, even though the price is at two very different points, its MVRV is almost at the exact same point. And at both times we were able to mark a short-term recovery. Here as well, at pretty much the same point. So yeah, OXT's MVRV ratio is currently negative, but it has a long way to go before you can really call it clearly undervalued according to this metric. So not a whole lot of obviously massively bullish signals for OXT at the moment. I would be surprised to see any, honestly, because most of these very low cap coins, I think, are going to be at the behest of whatever the Bitcoin does. All right, I think that's going to do it for today, guys. We're already about 20 minutes overdue or over time. Brian, any additional things that you want us to mention before we end the stream for today?
Just want to thank everyone for coming to the stream. Obviously, it's a volatile time in the markets right now. So your help in liking, subscribing to our channel, and spreading the word, however you are comfortable doing, would be fantastic and truly appreciated by us. Don't forget that you also have a referral link that you can generate in your account settings on Sandbase. Share any link you'd like with that referral link at the end of the URL, and you'll get a 25 to 35% cut of the initial sign up that anyone makes. So just want to thank you all and wish you all a very happy weekend here.
Yeah, apologies to Marcus for not being able to check out OM. Marcus, if you're interested in us doing some analysis on it, be sure to open a request on the link that Max has shared in the chat, and then we can maybe write an insight about it next week if we find something particularly interesting about that coin. Anyway, thank you everyone who has joined us today. Wish that I could have more positive news for you right now, but to be honest, a lot of both short and long-term on-chain metrics for BTC and Ethereum are kind of in the dumps. It doesn't mean that there's no chance to for especially a relief pump. However, there's not a whole lot of positive things to look forward to from an on-chain perspective, at least for the time being. Maybe hopefully things will change in the next 7 days. Let's all hope collectively that next Friday we'll be back with a lot better news from the side of on-chain data here at Santiment. Anyway, thanks all of you. We'll be back in 7 days. If you want to talk to us before that, there's a link to our Discord chat in the description of this video. There's a few groups where we discuss this type of data on a daily basis. So if you don't want to wait until next week, just join us over there and ping us in a DM as well and just tell us what you think about the stream. All right. Thanks, everyone. Talk to you soon.
Thanks, guys.